quickest thing that they could do is to contact their employer and change their deductions.
They can do that?
Yes, any time of the year. When you go to an employer and you apply for a job, or you get a job, the first thing they have you do is fill out a W-4. And what that is tells them if you're single, married, or a head of household or whatever, and your kind of filing status, and how many dependents that you have. Well, based on that information, single, how many dependents, that's how taxes are taken out. Just because you're a single person and have 2 children does not mean that you have to fill out that W-4 saying I'm single, 2 dependents. You can put 12 on there if you want. That's exemptions. That's how many exemptions you want. The more exemptions that you claim during the year, the more money you take home. The less exemptions you claim, the less money you take home.
Why?
That's just the way the tax table works. It's like if you only have, it's just you and just one of you, they're going to take out more money. I guess maybe with the logic that if it's 12 people in your household, you need to take more money home. Right. So that's the way the tax table is.
It's almost like an escrow account.
Yeah, it's this way the tax table is put together.
If you don't claim nothing, they're going to take out more.
Yes.
And when they take it out, does that mean you get it back later?
Well, no, it's really based on what actually is going to happen at the end of the year. The table.
How do you know what's going to happen?
Because the table is made up that way. So basically, if you're a single person and you have 2 children, that's what you're definitely going to file at the end of the year, single 2.
Okay.
Even though during the year you could have put single and 6. Not that you have 6 children, you're just claiming 6 exemptions so you could take more money home during the year.
But don't you have to wind up paying at the end of the year?
Not always. If you have enough credits, other kind of credits like daycare, education, credits reduce what you would have owed if you were just a single person with 2 children, but you claim single and 6 all year. That means you took more money home. Your tax is going to be still based on single and 2. But if you got enough credits, you can reduce that.
Don't get me confused now, because I'm gonna put myself in a position where I'm single and I got 2 dependents.
Right.
And I'm going to claim 12.
Right.
Okay. So when I go do this job and I get hired and I write on there I want 12
exemptions.
12 exemptions. How will that affect my paycheck?
You'll actually take more money home.
Okay. So the money that I'm taking home,
right,
I can use to pay for goods and services that I need as a single person with 2 dependents.
Right.
At the end of the year.
Right.
When I get ready to file.
Correct.
I'm filing single with 2 dependents.
Yes.
Even though I claimed
12 exemptions, and you're claiming exemptions on your W-4 and I guess
the money they're taking out.
Right. They're taking 12.
Right. So they're
based on 12.
They're taking more money out that I can use at the time.
Right.
At the end of the year, I don't have. I mean.
You don't have 12.
I don't have 12.
You actually just have 2.
Okay.
And
so my tax obligation is going to be higher, isn't it?
Yes. On your return, it's going to be higher because you really only have 2 that you can claim on your return. And people can do things like that, but they really have to be careful.
Right.
They have to be careful.
Yeah.
If a person knows they have a lot of credits or deductions, for example, most people take the standard deduction, but there's
what's that?
That means you have income, and then they have this standard deduction built in. It's a certain amount if you're single. I think it's like $5,500.
Okay.
Head of household, $8,500.
So they got to look and see where you fit.
Right. And so then, what that happens is, if you made $10,000 and you're single, then your deductions are $5,500. That means I get to take $5,500 from your wages, $10,000, before we go to the tax table. So we're being taxed on $4,500 now, as opposed to $10,000.
Okay.
So that's the standard.
Okay.
People can either take the standard or they can itemize. Only way I would have a person itemize if they have enough itemized deductions, things that fit in that category, that will be higher than the standard. A lot of times.
What's traditional in regards when you talk about
itemizing?
Itemizing. What are those things that make a difference when you do itemize?
If a person owns their own home and they're paying interest on their home, that's one thing that you can itemize. And if you in your house the first 5 to 10 years, most of your payment is interest. So you can end up with $11,000 worth of interest that you can deduct on a return. Well, that's higher than the standard. So then I'm going to itemize for you. Or charitable contributions. If you give to a nonprofit organization, for example, a church, the Goodwill, you can deduct those things. Say you gave $5,000 to a church organization. So now you got $15,000 worth of deductions. That's way higher than a standard deduction. So I'm going to itemize. If a person knows they have deductions that will reduce their tax liability, that's a person that could claim 12, even though at the end of the year they know they got 2, because they got enough credits to offset that, what they would actually owe. Okay. You know, I'm not, you say, you might think, well, you're kind of playing games, but if you know that you have a lot of deductions, you're a person that can afford to claim more during the year because you'll get more credits to reduce your tax liability. Okay,
people, unfortunately, when it comes to tax time, that's like, I wish I'd have known.
Right.
You know.
So that's what I really try to educate on. Let's look at what you're doing and why you owe or why you're not getting a big refund. Some people don't want a big refund. They just want to break even. You know, take their money home during the year and break even. Some people want a big refund because they use it for like this is my vacation money, so every year. So it depends on what the person wants. We can work the system where you can get a bigger refund, or if you end up owing a lot, then you may be a person that needs to take more out during the year so you don't owe so much at the end of the year. You can change your deductions any time of year, regardless of what employer says. You can change your exemptions as many times you want and you know, as often as you want. You know, some people will change their deductions when they think, oh, I worked a lot of overtime and I'm getting a really big check, and you know, because the more you make, the more taxes that they'll take out. So they can change their exemptions just for that pay period, take a lot at home, go back and change it to 2. And, you know, so, because you got to just be careful, because, you know, just say you accidentally left it at 12 and you only can claim 1, well, you'll probably be the person that owes at the end of the year.
Okay. But these are things that you have to have some guidance on.
Correct.
Most of the time, people aren't thinking like this, because for them, it's like, I got all this other stuff to do, and now it's time to do taxes.
Right.
I'm going to take my stuff in here.
Right.
And if the person doesn't ask me these things, I'm thinking what they're telling me is all I need to know.
Right. And a lot of times preparers don't tell. They just, you know, some of the larger tax preparation companies trying to get many in and out the door as they can. I usually like to spend at least an hour with my clients so we can kind of dig. Well, you know, did this person live with you? Did you help pay for their support? Then that might be a person that you can claim as a deduction that you don't even know. It's not just children. If your parent lived with you, or even if your parent lived in a care facility and you helped take care of the expenses for that care facility, even though the parent don't live with you, you could claim that parent as a deduction on your tax return. There's just different ways that, and just by talking to people and them telling me, well, my mom stayed with me and she lived in my house the whole year, well, then you could claim your mother as a dependent, you know? And so, just different things. Wow. When I be able to talk to people and bring things out where a lot of times, so I find myself doing what's called amendments, going back and fixing their return from the previous year, and you can go back 3 years and fix anything. If you find out this year, oh, I could have claimed my sister that lived with me, or her child that lived with me, and so as long as you got the proof that they did, and there's certain, I won't go into that because there's certain things that the IRS will ask for proof if they wanted to ask. As long as I can verify that you have that proof, we can go back and fix that return and get the difference in the money that you should have gotten up to 3 years.
Up to 3 years.
Yes.
Wow.
I'm Juanita Wilson, owner of Affordable Tax and Bookkeeping. You know, it's tax season time, and I love working with individuals and businesses in preparing their tax return. Give me a call at 402-453-4077, and let's see how much money we can get back for you.